Hi everyone, John Howard here with the Property Autumn Update. These seem to be very popular, which is great, and my predictions so far this year have been about right, which I'm very pleased about because there's a bit of pressure on all this, as you can imagine, especially when people can look back and see what you said before, which is what I've had to do to remind myself, but luckily I've done okay. Now, before we start, I've got to tell you about three things. First of all, Grand Designs show at the NEC. I'm on stage at 1:30 on Friday, October the 6th with Hayley Andrews. So that'll be fun. If anyone's around, please come and say hello to us. Also, we've got our Property Elevator Conference, really popular last year, and it'll be bigger and better this year, I'm sure. Also, there's a dinner the night before, so if you want to come to either of those or both those events, the dinner or the conference or both, tickets can be bought at propertyelevator.tv. And the other thing is I've got my two-day property seminar in London on the 13th and 14th of November. So three big dates there. Now, let's get cracking. So we'll start with the residential property market, because I think at the end of the day, the mainstay of all we're going to be talking about is the residential property market as such. And it's been a very interesting time. So with our estate agencies we have in Norfolk, we are at the coalface of all this, as you can imagine, as well as my property development sales and so on. So July and August, traditionally terrible months for any estate agent or property developer trying to sell. Actually, July and August for the estate agencies were not bad. Everyone is holding their breath for September because we don't know what's going to happen. Traditionally, September, October, very, very good selling months. The early signs are that things are picking up slightly. Of course, the interest rate not going up the other day is going to help that as well, and we'll talk about interest rates a bit later. So I think there's a bit of optimism within the market between now and November. What you've got to remember is I think this year Christmas is going to come early for anybody in the property world. I think people are going to shut up shop early. I think you've got basically 2 good selling months ahead of you, 2.5 maybe, and that's it. So if you've got offers and you're thinking you'll get a better one in a month's time, you won't. If you get an offer and it's acceptable to you, for goodness sake, take it. Don't mess about. The market's dropped 10 or 15%, and it's showing no signs of going back up. Remember, if you're buying, people say never catch a falling knife. However, what I would say is 70% of first-time buyers have had help this year from their family and friends, which is great, and they're looking at it probably say, well, look, I know interest rates are a bit higher, but we're getting a 15-20% discount potentially. So that's turning things around, as well as rents being, rents keep going up. So actually, bizarrely, the fact the market is dropping is actually underwriting the market a little bit in some ways. So that's how I see the residential market for the moment. If you get a good offer or a decent offer or an offer that you really think is a bit below, I would still take it and move on. Now let's talk about the big house builders and the property developers, one of which I am, of course. So the big house builders are building a third less houses this year than last year because they can't sell them. That's a fact. If you go around anywhere in the UK, you'll see signs up saying part exchange welcome. As soon as you see that, you know that the house builders are in trouble and will give you discounts. Now, they'll give you even bigger discount if you time it right. So, for instance, they have to report half-yearly results to the City of London. If you time it right, and you go and view a property about 6 weeks before they have to give their figures, and they haven't sold enough properties, they are likely to give you a bigger discount because they need to show how many properties they need to show that they've reached their target, even if it's at a big discount. So that's a bit of a tip for you, anyone looking to buy a new home. As for the rest of us, it's very patchy. In some areas, I'm finding that properties we've got are selling quite well. Other areas, not so well. It's very patchy. It's not a complete disaster. But of course, anyone has built in the last 3 years has had to cope with 30% build cost rises, property market down 10 or 15%, and interest rates doubling. So, you know, it doesn't matter how good you are. If you didn't get an uplift in terms of when you bought it because you've got to gain more planning permission, or in our case where we buy a lot of part finished stock off receivers, which has got a big discount, if you haven't done that, and you know, it's very hard to see how you're going to make money if you bought on the last 3 years, and unless you're in one of those areas that just hasn't gone down at all, which there are areas like that. So it's tough. If anyone out there is struggling as a developer, please get in contact with us, because we have some funds we can put in to finish your project for you and share some of the profit. So don't bury your head in the sand. Talk to your bank and make sure that they are on board with you. They want their money back, and they're realistic to know that they may have to be patient to do so. So don't have sleepless nights. Speak to your bank, speak to me, or whatever. Very willing to help. Now let's talk about property investors. They've had a really tough time, because to invest in a property now in the long term, with the buy-to-let market as it is, you're going to have to put 50% down. Now, some people are putting 50% down. The market is not dead, but it's much, much tougher than it was. If you have a number of investment properties and you haven't managed to fix them at a low rate and the interest rates has gone up, my advice, really, if you're in it for the long term, stick with it. You will regret selling these properties in 2 or 3 years' time, probably, and wish you hadn't. So although it's tough, even if you're subsidising the mortgage for the moment and you can afford to do it, do it. If you can't afford to do it, you need to get them vacant and get rid. I understand that. But if you can stick in there, you know, property is a long-term investment, 20, 25 years, and then pass them on to your family probably. It isn't a get rich quick unless you really know what you're doing. And, you know, I do a lot of trading. We buy and we sell the next day and all the rest of it. But that's very tricky to do for a lot of people. I understand that. But as an investor, I'd stick with it if you can. Interest rates, I think, will start coming down next year. And we'll talk about that in a minute. But if you can stick with it, do so. So what's the future? What is the future? Because that's what everyone wants to know. As I said, I think the next 2.5 months is a window of opportunity to sell, sell, sell. In certain cases, a window to buy as well if you can get the right discount. But don't go paying the asking price for things, because you don't need to. That is for sure. The other thing is, early next year, you know, it's dark, it's gloomy, there may be some snow knocking around. There'll be even more blood on the streets, we say, because what happens is January, February are not good months. I think after that, things will start to improve. And I think with the election looming, probably November time next year, that's my prediction at the moment. That's what I've been told by 1 or 2 friends in Westminster there, that the election's likely to be after the Tory conference. Do come and say hello to me. It'd be great to speak to you. A fellow Tory, it'd be great to speak to you. They're getting less offers these days. The reason these conferences are so important, by the way, is that they make £6 million at the conference. So they're not going to dodge a conference. They're not going to have the election before the conference, I don't think, in case they lose. So I think they'll have a conference next year, then they'll have the election. So suddenly things will improve next year. Interest rates will come down probably next summer a little bit. Inflation will be down as well. And no doubt, surprise, surprise, the Chancellor will manage to find the odd tax break as well for us all. Prior to the election. That always happens. So I think next year, summer onwards will look better, but I think we're going to be in for a tough start. I can't see interest rates going up anymore. Hopefully, famous last words, we're over that. I don't think the last one was necessary either, to be honest with you. So there we are. So all that remains for me to say is, if you're looking to buy, remember to make an offer and stick with it. If you're selling, be sensible, get rid. Because I think things will get tougher next year before they start getting better. And don't forget my 2-day property seminar, which is on the 13th and 14th of November. I'm buying dinner after the first day, which would be fun. And before you book, please do organise a Zoom with me via my website so we can make sure it's the right seminar for you. See you then.